Welcome to another Coffee with Samso, where we speak with ASX companies and the leaders that manage these projects. We're here at the UWA Club here in Crawley again on a nice sunny day. I've got Andrew Radonjic back here from Venture Minerals, who is his first show back in 2022. Andrew, welcome back.
Good to be back.
Look, it's been a while since we sort of had most of the guys that are doing the first show. The theme seems to be what's for 2022. But look, maybe just give us a rundown on each of your projects and see where you guys are at.
Yeah, happy to do. Yes, look, even though we had the Christmas New Year break, supposedly, Venture successfully did a capital raising in the shadows of 2021, and we raised $4.25 million in the placement, and then even though we only had $1.25 million underwritten in the SPP, we ended up getting bids of up to nearly $9 million, and we took 6 of that. So money was coming in the door on the 29th of December. It was just an outstanding response from our shareholders. We've got 8,000 odd shareholders, and
that's good confidence, yeah.
Oh, well, absolutely. Obviously, there's a disappointment. The iron ore project late last year, only getting one shipment out with the iron ore price falling off. But I'll talk a little bit more about that in a second. But they obviously clearly see the opportunity to buy it at those levels, and took up their full allocations, and we had to cut them back a bit, which is a good thing. And we raised the money, so we didn't have much of a break, and the drill rig at Mount Lindsay started firing up again, after about 10 days off, and that's been our main focus. It has been Mount Lindsay. We're building the feasibility study team there, where we've started employing a few people and consultants, which we just updated the market recently on the back of the feasibility drilling results, and the feasibility drilling results were being show, I suppose, that the high grade shoots at the main skarn, the McDonald shoot, and can deliver some spectacular looking drill core and some very nice results. Like 119 metres at 0.8% tin was the latest one. This is not true width. This is we're drilling to collect sample in the most efficient way possible. So even though it is to a degree infilling, it's not the sort of drilling you'd be doing for a resource, because we've already drilled it out. We've got 100,000 metres, over 100,000 metres of drilling in the project. It's all drilled out, but to do this new feasibility study, which is underground only, that's the main new part about it. It's completely underground focused. But the thing about it, which is which I've sort of also wanted to do, is try this breakthrough we did in our processing. Right at the back end of after the feasibility study on the open pit was completed back in 2012. Our metallurgist was looking at cleaning up the tin concentrate. We had about 3% tungsten in it, and it was a penalty. So he trialled with our concentrate. Remember, when you put in 3 tonnes of sample and you end up with a few kilograms of concentrate in the exercise. It's very precious. So he did a whole bunch of tests trying to separate the tungsten and the scheelite from the cassiterite, the tin ore, and electrostatic separation. The mineral sands technique, very stock standard technique, worked beautifully. And we've got a 75% tin concentrate and a tin, so it separated fantastically. And very much as we pulled back in 2014, we had to sort of remove our COO, metallurgy CFO, metallurgy manager, and the metallurgy manager said to me, "That's a game changer for us. We need to apply that to the flow sheet." So it becomes, instead of numerous types of flotation, etc., quite expensive, it works. It's a very conventional flow sheet. It certainly works, but it's there's now a better way we can do, and we're going to explore that. Instead of it being sort of like a CITA test, we're collecting about 10 tonnes of sample. We're collecting a lot more this time. We know that we're going to need these guys. First thing they need to do in a feasibility study is to redo this work, is they need to sample. So we started that work back in September, October last year. It's sort of, we were onto it straight away because we knew we needed that. And that drilling is just about to finish. And then we'll go back onto the exploration. But the feasibility study starts, and you need the main disciplines. You need the geology. The geology's done. Underground mine design, we need to redo, and we're redoing the flow sheet. So those are the two main things. But we're not doing drilling to make our resource bigger. We're just collecting sample essentially, and even though it does give us more confidence in the infill, and certainly, if we drill these holes and didn't get anything, it'd be an interesting thing to adjust the resource model on. But we'll update the resource model. But we're heading big chunks of scheelite, big zones of this massive cassiterite, and that's why we're getting some results up to nearly 10% tin over 3 metres. But we're just bulk. We're just trimming the side of the core just to make sure the assays are about what we expect visually, and then we're putting that core and we're bringing it over to Perth. We chose BHM as our processing consultants, and we will get that work done in Perth. So we're not any COVID restrictions we can avoid, and we're about to engage a study manager. And also a mining engineering group who will look to optimise the Mount Lindsay deposit. And remember, the feasibility study done was at $23,000 back in 2012. It's now 45. It's nearly double that price. So our underground idea back, even when we were thinking about this in 2018, so this idea is not today's idea. We're doing the scoping study in the underground, which we never finished, because we had to focus on getting Riley up and running. But we're now looking, instead of the scoping study, which was done in 20,000, we're doing 45,000 or a much higher number. Maybe not the record. Maybe by the time we do the study, who knows? It might be 60,000 or 70,000. Maybe 45 is conservative. I don't know. But anyway, the number is certainly, with the thematics on the tin market, it's only going to get better. So all of a sudden, your underground mine, which might have been, 3.5, 4 million tonnes, could be significantly bigger. But we don't know what the answer is, and that's what we need to work out. And that's what, the next 9 months, and we'll tell the market exact timing once the study manager comes on board and tells me what that timing is, so we can tell the market what the timing is. So I know he's accountable for that timing, and therefore the company's accountable for that timing. We've got a schedule already for our MET program. Mining engineers have told us, that they've put in the quotes for the job. You tell them that's achievable, but I want the study manager to say, own it and run it and make it happen. So I think 9 months is achievable, but we'll update the market once we've got that clarified and once our study manager's on board.
There's no. I've been very bullish on tin and for you guys as well, because there isn't a lot of companies out there that has this position where you guys have it. You've got a deposit that's next to Renson, which is historically been there for a long time. So it's that the proof is in the pudding in a sense. And I remember when we first spoke about should we focus on tin. That's almost 2 years ago. It was rising to 30, remember, or something, or 28, I think it was. And we're talking 45, and we keep going back to this Wood Mackenzie report, and I can't help but think that number could be actually high, as you said, could be 65s or whatever. So the dynamics for tin is very solid. It's been rising. If it ran sharply up and came back, you would question that. But that rise has been fairly slow and steady over the 2 years we've been discussing this, or watching it, 12, maybe 18 months more intensively. But to me, it feels very sustainable, because if we go back 10 years ago, there wasn't this EV thing, there was this no emission thing. So there wasn't this backbone that could carry this, whereas now everything's been dumped, and then you got this potential ESG issue. I can't help but think this is got to be the most unknown or unloved commodity space in the EV space. Would you be correct? That thinking could be correct, you think?
Oh, look, there's no doubt been a paradigm shift. It's sort of like, something's crystallised over the last couple of years, and maybe COVID's helped it, I don't know, but the push into industry, instead of waiting for government to make a decision about what it's going to do for climate change, industry's taken that, and that all sides of industry, and that'll be including mining, have taken that and say, yes, we now have, we can make the things to make the changes. There's nothing like, this advancement is usually due to throughout history, dramatic events. So climate change is a dramatic event, so the whole world's reacting, and the mining industry has joined that. Especially in the last couple of years, you've seen. So the Wood Mackenzie report, it touches on 90% of the world's tin is high risk ESG. It's coming from South America, Southeast Asia, Africa. Say no more. Like there is no, try and build a mine in Europe. Very, very hard work. Very hard work.
Even if that was 50% correct, it's a big change in volume that you don't have anymore, right?
Well, that's right. And the demand's going up. Demand's going up. Supply is under pressure.
Yeah.
Current supply. Dredging the seafloor out, off the coast of Indonesia is now becoming less acceptable. It's not sustainable.
Yeah.
Tin production. But on the west coast of Tasmania, hydropower, is there. It's battery of the nation.
So mining,
it's a huge
sector?
green element.
Yeah.
It's sort of, this green mining is besides the fact you can hear all about, the environmental groups in Tasmania, the best place to build a mine is on the west coast of Tasmania, and the Tasmanian Minerals and Energy Council, TMEC, is sort of, is talking about that. It is better. There's less emissions to be mining on the west coast of Tasmania than almost anywhere else in the world. And that's, the power supply. It's all renewable. There's wind power, there's hydro power. It's there. You mine underground, okay? And there's lots of good reasons for mining underground. One is it rains a lot. That's one aspect. But if you go underground, you don't have to clear vast tracts of land for an open pit. That's why our development's gone. Our development's gone underground for a couple of reasons. One is smaller, higher grade project, more profitable, a smaller plant, less capital required up front, quick to start up. That's why we when we pulled our open pit permit and submitted our underground permit application is because we're dropping the areas were cleared by 80%, and then even halving that again, the 20% that's left, halving that again because the tails dam will be temporary because you need a void before you can start pumping it back into the underground, and the waste rock they'll be temporary for the first 2 or 3 years, and then they'll go down into the mine. So at the end you just got a footprint of a mill, we don't believe you'll only find one mine there at Mount Lindsay. There'll be several, but which exploration will hopefully prove over the coming months or the rest of this year. At $10 million a raise in combined with the SPP and the share purchase plan, half of that's exploration, half it's for the feasibility study, pretty much. So, so chances are that we will, have a plant site, which we will be feeding continuously from one underground mine here, another one there, wherever it is. We've got 48 EM targets, and we've tested a couple and got some great, great looking alteration and mineralisation in the first couple of holes, one along strike to Renison, another along strike to Mount Lindsay itself. And when I mean Mount Lindsay, I'm talking about the main scar, number 2 scar. So Mount Lindsay is the name of the whole project, so a little bit of confusion there. But that, there's hitting that sort of that mineralisation along strike to known deposits is very, very encouraging indeed, and we've been looking forward to getting a rig back there, drilling, and getting another rig and upping up the exploration effort over the rest of this year. So, we're in boots and all for tin going forward.
I mean, a lot of people may not realise, but the rush of the lithium price, if you plot all the graphs together, it was almost in the same way everything else seems to be taking off. So they all, like, it's as if that moment people just like, oh, everyone clicked at the same time, because if you see the rise of lithium price and copper, nickel, and even some things like tin and stuff, the timing was about in the same space, and also, I said, going back to Mount Lindsay, I mean, I've looked at the geology recently. I've read a few articles in there. I think you might, even in time when you guys are drilling there, you probably find that you're in an environment more than tin, tungsten is. Skarns have a history of bringing up a lot of stuff, right? The geology-wise, and most geologists out there would understand this. But we won't talk about that now. But I think there is obviously in that area you've got all sorts of nice commodities anyway. So it's it shouldn't be any surprise.
No, well, skarns do have a history. As you go further away from the source, other elements start popping up, and there is a little bit of evidence of that, but it's something we probably haven't followed up. But and we've only drilled Mount Lindsay down to about 350 metres. It keeps getting deeper, so I expect. The main number 2 is going to get deeper. I expect us to make not only discoveries in terms of tin only or tin tungsten, but even possibly other commodities. Is a realistic chance.
Yeah, I mean, let's not get bogged down on Lindsay. I know how we could be talking forever, and everyone will probably get sick of it. Your Julimar lookalike, how's that going? What's happening there for guys who haven't been following you day by day?
Well, look, like Mount Lindsay, it was a small break. Our partner Chalice did the necessary work by the 30th of November timeline, and the results of that is 11 bedrock conductors, which is a great result. And I suppose what could be a little bit frustrating is that 3 of those kind of very close to holes that we drilled before. In fact, one of the plates that they model for these conductors, right on the edge of that plate is that 2.4 metre intersection of massive sulphide, which 0.5% copper, 0.04 cobalt, 0.05% nickel, and a little bit of elevated gold and palladium. So we're going, oh wow, hang on, that's pretty exciting. So middle of last year we said one was sort of 10 metres away from hole 4. We had 86 metres of disseminated sulphides, elevated palladium or PGEs, and one's down dip of a 17 metre intersection of sulphides in hole 3. So we'll be at 200 metres down dip, but it looks like it's in the perfect right spot. So I suppose a little bit unlucky with our holes, but Chalice, as they've mentioned in their quarterly report, are out there doing some quick soils. They very clearly understand there's a timeline that needs to be met. They got the deadline before, so we've been supportive and understanding and kind, and gave them the extension the first time. But we want to make sure they get the drilling done. The next deadline is the 29th of July this year. That they need to spend probably around another $800,000, and that has to be done with drilling. And they've mentioned that they will be moving towards drilling. And I think I do note in their latest presentation that they're probably targeting that sort of Q2. Having said that, they are acutely aware, like we are, that it does rain, and we are operating a state forest, and there's things like phytophthora to deal with, and they don't like you working in the middle of winter, as we knew when we did our exploration back in 2018. So certainly expect maiden drilling program by Chalice in the coming months, and $800,000 is a fair bit of drilling. So they've got the money, they've got the resources, I'm pretty confident they can achieve that. And if they don't, then obviously that's a decision the board needs to make about what happens going forward. I suppose we can always take it back and drill it ourselves and spin it at another company, for example.
Is that a hint, mate?
Well, at the end of the day, it's I suppose the Chalice story is now in excess of $2.5 billion. So if I can't go and raise something for a new float, on the back of what we have there, I'd be very surprised. And we can go get it funded ourselves. So that option is available to us, but certainly in the agreement we have at the moment that Chalice still has till the 29th of July to achieve something, so that's their right, and we fingers crossed that they get a, as they say, Julimar lookalike, get Julimar Mark II, and everyone will be happy.
I mean, the Julimar lookalike at Thor, I mean, that's a story that will travel by itself, in my opinion. And it's either going to end in Chalice or end back with you, and both is a good result, right? So that's the way I see it. If Chalice goes out and pumps out 800,000, that means that they like it. If they don't do that, you get it back. You've got all these targets that you didn't pay for. You can go chase anyway.
Correct. Yeah. That's right.
And we've had this discussion before that you sort of knew that what you had, and you knew that they were going to find success anyway, because you've done the drilling previously. But moving on to your other one, Kulin. I guess that's another one where could be a monster again if and when things get done.
Yes. Well, look. We've got a plethora of projects, and we have to prioritise, and clearly, the logic is that, you want to get mining, and that's where you should focus your efforts, and the other assets, you need to keep the ground in good standing, etc., and you work them up, and certainly Kulin we've doubled the land package, so we haven't been sitting around. We drilled 3 holes. We hit 18 metres at 0.6 grams per tonne gold. We're in the middle of nowhere, and there's not a drill hole for 40 kilometres around us. And getting 31 metres of gram in a golden trench in a granite saprolite. We still haven't. The hole we stepped back because we were sitting in there. We did a flora and fauna survey. We sort of got a bit frustrated with how long this process was taking, so we stepped back here. But really, you need an RC rig to be drilling underneath the trench to work out where that gold is going. Yeah. But we hit a down dip from 100 ppb. Not 250 metres down dip of 100 ppb soil anomaly, and bang, got it. So that's bloody highly successful, So having said that, we this mafic, ultramafic layered complex concept we were going on. We saw the opportunity to grab some land nearby, and Anglo all around us, by the way. And so we grabbed it, and we think we've got some of the best targets around. Now, is it a Julimar lookalike? I can't answer any of those sort of questions. It's too early to tell. It looks like it's a different style, more traditional sort of style. I do note the Gimbardi metamorphic belt sort of heads from Julimar heading towards Kulin. So because if it's these sort of deep crustal type targets and faults, we're learning a lot about the Southwest Yilgarn, and a lot of people have sort of shied away from it, despite the fact that you've got Australia's second biggest gold mine at Boddington sitting there. You've got a world-class lithium asset at Greensbushes. You've got mineral sands. My God, there's bauxite. When you think about the riches in that area for something that's really been pretty poorly explored, it's outstanding, and Julimar just adds to that list. And certainly Kulin will add to the list, but logically, you just don't go out there. You've got to deal with farmers. It's a slow approach. There's RAB holes there, 4 air core or RAB holes drilled by a private company 15 years ago. And they got nickel, they got palladium, platinum, and they're only 22 metres deep. I think it was the deepest hole, and that's highly encouraging. So we want to sort of pinpoint those targets, but the next logical step is airborne EM, and certainly the waiting list is like 6 months, because everyone wants to do airborne EM. Everyone wants to discover another Julimar or whatever. That's you need a good ground base of information. You need airborne EM. You need the mags there. It's good enough. You need soil coverage, and when we've got 600 square kilometres, good package of land. We've got 3 big targets, two are 20 kilometres long, another one's 10 kilometres long. You want to try and, to increase your probability of success, try and get your target zones down to something a bit smaller. And, we'll get that airborne survey done, probably Q3, I'd say, and that will then generate some targets, and we can then maybe have a look at drilling it again, or more soil sampling on those targets. Exactly, the process is just to try to test it.
Right?
And you can't sort of jump here and there and everywhere. You got to do these things logically, and we haven't sort of dropped the ball on Kulin. That's what we're doing, and those guys are busy as anything, and the extra funding we got from the SPP allowed us to sort of to engage with those guys and get a survey organised. So we've got the funding, got the funds available, and the good news is that if we can generate some good targets, Q3, then we'll prioritise those accordingly. Are they better than drilling at Mount Lindsay? Not at this stage, but we need information that makes it better and higher priority.
I mean, that whole area. I mean, I was watching the RIU presentation for Charles, and they highlight that corridor, right? And I remember clearly a few years ago, I was talking to someone. I said, "Geez, we've got Boddington sitting there, it's such a big target. You got green bushes, and surely there must be more than that." And the comment back was, "Oh, yeah, there's just a sliver of greenstone that popped out, and it's just one of those things that just popped out in a pocket." But I think the discovery of Julimar and what Charles is doing, what you guys have found in Kulin and everything else, and now a lot of guys have been focusing on this so-called corridor, which is effectively almost like a new frontier, because it may be small and narrow compared to the whole state of WA, but when you're standing on the ground, it's a great big place. So in that sense, it's just suddenly opened up for everybody in terms of what is out there. So in terms of Kulin, I love the prospect. I mean, we discussed it in our very first coffee with Samso, I think. Going to my other project that I like, which is Golden Grove North. What's happening there?
We're looking at doing some additional EM work, and in this case it'd be ground EM. We've done airborne EM before, but there was one area there which we've gone back and done a bit of further work, and we want to do some ground EM. And if you look at that tenement we picked up, a joint venture ground, you'll see that on the map that it's got a little bit of that Melville trend that now Gascoyne Resources have. Yeah. So we've got some gold sitting in an ultramafic. So we've got ultramafics, I suppose maybe nickel potential, and we've got some gold potential there. But there's some areas there which also have some VMS potential. So we wanted to try and complete that exercise, and so the next time we drill a hole at Golden Grove North, we want to be again get the best target. So you're very much like Kulin. We'll drill at Mount Lindsay, and we drill the first few targets, and like always, Noel, if I hit Renison, I'll be drilling at Renison.
Yeah.
If I hit Golden Grove North, or Golden Grove at Golden Grove North, or a Julimar at Kulin or whatever, then that's where we focus. Yeah. And it's very hard to do all these things at once, and that's always been I suppose a criticism of companies. You got a lot of projects. If you looked at companies who were just tin only assets, you would have seen some of them disappeared over from 15 through to 18, 19. Things got bad, and they struggled. But we got a market cap of $200 million last year. That's because we've got world-class tin asset. We started iron ore mining at Riley. We've got a great portfolio of projects, and as vindicated by the Julimar, the Chalice joint venture. So we have very attractive assets, and we take a lot of pride in selecting areas. And when you think about, we pegged these projects years before there was a Julimar or anything like that, and before this boom we're going through at the moment. So back us for what we're good at, and we will deliver in the fullness of time. And I'll be very surprised if we don't make another discovery any one of those assets. But we obviously think out at Mount Lindsay will deliver our next discovery.
Okay, well, my very, very first. I hope those guys don't demand copyright. Um, but look, the very first coffee sensor we had was, it's about how diversified you were, but that each project was, in my opinion, was very solid, and had all you needed was some funding to work on it. Um, going back to your Riley project, which was, giving you a lot of value before. Um, can you just give us a rundown on your thoughts? What's happening there?
Yeah, look, after, and certainly our decision to shut Riley down was 100% correct. Before we started building that second ship, and the shipping price was going up and the iron ore price was going down. So, that decision was vindicated. Certainly there's been a lot of interest in terms of a lot of prices now, heading towards 140. And we sort of said, well, look, we've commissioned the whole process. We even got paid, which in a falling market, we made a decision with these offtake guys, because if you dealt with a private steel mill, then all of a sudden they go, mate, we're not paying you, or things like this. Things like this do happen, and that's why the group we got Penfold as our marketing agent. They were very careful. So we chose a group who wouldn't walk away when it got a bit tough. And we got paid. We ship loading, haulage, processing, mining. We did the whole lot, and we learnt a lot of lessons. And we pulled those contracts out because we don't know when the iron ore price will go up, But we got the project ready to start quickly. But there's the scenario we've been looking is a quick startup scenario where you can turn it on and turn it off, within almost 24 hours. So if I said, I could say tomorrow, I'll get on the phone this afternoon and say, start it up. So we trialled the process of dry screening, previously before we built the wet plant. It didn't work. We then adapted that to supplement the feed from the wet plant to get that first shipment done, and it worked. So we're looking to use that. Don't fire at the wet plant. Do a dry screening. Get a machine. Hire a machine. Same machine again. Bring it down. Start mining. Put through the material that can go. Not all the ore. There's only a reasonably small portion that can go through the plant successfully. And there's probably a few shipments there we can bang out quite quickly. We've already got a significant amount sitting on a crusher pad, ready to go, and we could get next shipment out in a matter of weeks, should we make that decision. Common question is, what price do you need? As with all these things, it's not just simply the 62 price everyone sees headlined. It's we have a 57% product, which everyone knows. It's very much like the super special fines. We get badged against what they do, what FMG does. They are the market at that price, and this is recognised by everyone, as well as our friends at PSU, and so that was quite logical. But every month there's a discount that's organised by FMG, and currently that discount is 35%. It's something like nearly 10% higher than when we made a decision to go with that first shipment. The shipping price. If I spoke to you last week, I would have told you it's in the high 30s. Well, guess what? It's now $10 higher. That's how volatile it is. So it's back above the price we paid before. The price when we booked the ship was $165, $170. It's currently, so it's below that. So I can definitely say that if we can get those thematics to line up again, then we'd probably go again. There's no point lining up on a break-even. People are like, what is the break-even price? Well, I need to take into effect shipping price, discount, exchange. I've forgotten about exchange rate. That's 72 cents. All those things, shipping's done on US dollars. You book a ship, that's the price you pay. It doesn't vary. But the ship price doesn't vary, but the discount doesn't vary. But what does vary is the price you get paid, because that's exposed when you book the ship, load the ship, it gets shipped, it arrives there. So you've got an average over that period of time. So you're exposed to 6 to 8, nearly 8 weeks, nearly a couple of months. So you've got to make that decision. You've got to crystal ball gaze what it is. So you don't make that decision going lightly, but we've got a strategy that's available that we can get up and running very, very quickly, and that's what we set ourselves up for. So once things settle down, post the Olympic Games, Who can predict what's going to happen in the iron ore markets? That's a challenge. But if that opportunity comes up and those thematics appear again, and then we start making some good margins, then we can see a few shipments ahead. Then now we can look at hedging because we actually delivered a shipment, and the customer was happy. So it's we can go again. We found a customer, they're happy. Obviously they'll take material today, but we wouldn't make any money, so there's no point there. But we've got a track record, albeit quite small, but we have now a track record. So we're not going to make any decision lightly. We're not going to risk the company because when you look at Riley, in the scheme of things, it's the big picture. The big game in town for us is Mount Lindsay, very clearly, at $45,000 a tonne and 80,000 tonnes of tin metal, over 80,000 tonnes of tin metal in JORC, plight and resource. You do the maths and you see what the value is versus Riley, and it's pretty clear. We've got one of our major shareholders has come back on the register on the last raising because he's a bit of a tin bull and he understands, or the fund understands, should I say, that this asset's one of the best, and they've gone around the world looking at it, one of the best in the world, and it can only get bigger. And some people say, why make Mount Lindsay bigger? We've got one of the largest undeveloped. Well, the exploration potential, it could be a lot bigger. We could find something higher grade, but we've got something to start with. If I find a deposit tomorrow, Noel, that doesn't come out of the ground the next day. You've got to drill it, met work, test work, feasibility. But if you've got a plant sitting there, and I can feed it into that plant, I don't need as good economics, and all of a sudden, like everything else on the west coast of Tasmania, we're looking for a multi-decade opportunity. We're not looking for an 8-year mine life, we're looking for an 80-year mine life. That's what we're looking for. So that's what you've got to think, and Rennison's got an endowment of 500,000 tonnes of tin. That's what's achievable. We're not even 20% of the way there. So when people say, you've got enough, get on with it, well, we are getting on with it. We are getting on with it because we're doing the study. It's already drilled out. We can find more. If I get an announcement where I've got a new discovery, I've got 100 metres at 1% tin, then that's going to get much bigger appreciation in the share price.
Look, I think there's no doubt about, in my opinion, I think that the fact that multi-year life is just a case of timing. You've got the Savage River's been there for decades and things like that.
50 years, for example.
And so those kind of things, I think it's just, and I think you do need to explore. Well, when you use the word explore now, you're not actually trying to find something from nothing. You're actually trying to find something to add on to the inventory in that sense. And I'm all for the Mount Lindsay's the main game. Look, Riley's, if you can pricing structures right, I mean it's fantastic, but the main game is Mount Lindsay, true and true. I don't think that's any doubt.
Oh, exactly. But we've got an option for the iron ore. If it pops up for a few months and goes back to 200, we can make a significant amount of money with a handful of shipments. If that's all we ever get, then if we capture that, we're ready now. We're not commissioning, we're not doing anything. We are ready to capture, and then all of a sudden you could make $20 or $30 million quite quickly. You do that, don't dilute shareholders. Having said that, the capital for building the new Mount Lindsay, the underground mine, and all that, we're looking to get a fair bit of that out of the government through the critical minerals pathway, and we're working towards that. And we need a feasibility study to get that process really moving along, and that's why we're doing the feasibility. Okay. That's another good reason for doing it anyway.
Okay. Look, Andrew, we've mumbled on a long time, and everyone's probably half asleep now, or turned off. But Andrew, it's fantastic to get the update, and I think it's a good journey. I think we covered a lot of things, and I guess maybe the next conversation we'll talk about a bit more on each project. But lots of stuff that I want to talk about, but I'm wary of time. But look, going forward, I've sort of been talking with Florence Drummond from the Indigenous Women in Mine Resource, and they've come up with this coffee package, which is featured here, and you were wondering what they were.
Yes, I was.
And so they're for guests who show up.
Thank you very much.
There's 2 here. Everyone gets 2.
Even better.
Yeah. Anyway, thank you, Andrew, and let's catch up again.
All right. Pleasure as always.
All right.
Fantastic.